master. Andrew Holland, CEO of Avendus Capital Alternative Strategies, now joins us. Andrew, good morning. You've been calling for some correction, and I'm sure you have some shorts in your AIF. That's what AIF does, right? I mean, allows you to take advantage of situations like these. Your sense of whether we have more to go in terms of correction, because some would say we've just started.
I think we probably just have started. I mean, when we spoke last time, Anuj, I said, we could see a correction of up to 5% on the main indices, but obviously the pain will be felt below that, and this is what's starting to play out. As we come towards the end of this month, and then what do we have to look forward to is really GST and the disruption that's going to cause, and all these farm loan waivers. And the problems now popping up in the power sector, which again we talked about last time, are pretty huge, and I think liquidity has made us ignore them. But I think we're starting to come back to the fundamentals now, and that's not just for India. I think globally as well, markets are looking a bit tired. We're seeing a divergence in views in the central banks between reflation and deflation, and that's causing a little bit more activity on currencies as well. So I think all of this will play out, and I think it's going to play out negatively rather than positively for global and for Indian markets over the next 1 month.
Andrew, how are you reading this whole move towards GST? Because, we keep hearing, obviously, two different views. There's a view that says that expect more disruption. And there's a view that says that, everybody's been destocking, and now they're going to really, restock in July. So maybe we'll see stronger numbers then. What's your reading? So,
only from my own kind of viewpoint. So I've been, trying to buy a new TV actually, and now I'm told it's out of stock, and you have to wait till after GST is implemented. So that means either a lot of people have been doing a lot of buying beforehand, which I think has been the case, because there's a lot of discounts out there. So I'm not sure everyone's going to rush to buy in the first few weeks of GST. Certainly I'm not. I'm going to see how it all plays out and how pricing starts to either kind of stabilize or go down. And the expectations are that prices will probably come down again to try and kickstart sales. So I think from my own evidence, and it doesn't make me feel good. All the corporates I speak to, I mean, the large corporates say we're fine, but guess what? We don't know about our partners below, the small and medium-sized businesses. And I was with a very large company a few weeks back, and they were just saying that the rules keep changing. Every time we're kind of ready, then we have to change something else. So there's a lot of confusion out there with the large companies as well of really what they have to do and how they're going to do it. So it's going to be a very difficult 3 months, I think.
Andrew, hi, good morning. You've been bullish on housing finance companies, but now increasingly market watchers are raising the red flag on the entire sector, given the historically high valuation, the increasing competition, and questions being raised whether the pace of affordable housing, the new houses which are being constructed, can be fast enough for lending to continue at that hectic pace. Do you still continue to be bullish on that, or is it time to moderate the optimism?
Well, I don't think it's time to moderate. I mean, we've talked about affordable housing really from a longer-term view, and if you fast forward 5 years, how big is the sector going to be, and how big are those companies going to be? So yeah, there might be short-term kind of pullbacks in the share prices, but the long-term momentum and rating of these sectors will only continue to rise going forward, despite the competition. This is a just think about how telecom was, 10 years ago. This is where affordable housing is. It's not going to stop, and it certainly, will get a little bit more competitive. That's for sure. But there's enough, I think, going around for everybody to make very good profits over the next 4 to 5 years. So we're taking a little longer-term view, and we're okay with some pullbacks. We'll just buy more.
Okay, that's interesting, Andrew. So you're not extremely bearish on market, Andrew. I mean, you don't see this market, correcting, say, 15 or 20%. That's ruled out.
No, I'm not seeing that. I mean, obviously from what I can see globally, I don't think there's that big a fall. There are some worry points around, kind of leverage and debt in the auto sector, both in the US and a little bit in the UK. And China's still a worry for me because I think they are slowing again, and they might have to depreciate the currency at some point. But I don't think that's in the very near term. So I think 5% is really, but the pain underneath that will be a lot more, Anuj. I think that's what I'm saying.
By the way, there's a real smart pullback that's underway. In fact, we were slightly positive, almost positive for a bit. And it's the banks that are leading the fight back today. The Nifty Bank is actually trading in the green. And take a look at something like an ICICI Bank or a Yes Bank. They are really trying to pull back. And that's an interesting move we've seen on the Nifty Bank itself. Andrew, so let's actually talk about banks, since I just mentioned that. I know you've liked private sector banks quite a bit, but just a word on the PSUs. Whether you think prices will go down even further, because we are now hearing about higher provisioning requirements.
In PSU banks, I have nothing positive to say. I mean, I can't think of anything positive. There's no fundamental reason to buy them. And if anything, they're going to continue to come under a lot of pressure, not just from the loan waivers, but from industries like power, which is now, I think, coming to a head in terms of the problems. I mean, for major companies to offer their power plant for £1 rupee, it's telling you all you need to know where the problems are, and it's still unviable, and there's too much power around. So, the banks haven't really done much to it. And who's taken a haircut? No bank's taken a haircut yet. Wait till they do, and then you'll see the further derating of the whole sector. So it's a place I can avoid, and I'll keep avoiding it for a very long time until I see some real action, which makes me feel that there's, at least the management's thinking that there's a problem out there rather than just hiding behind, the problems which they are doing. You can sweep it under the carpet for so long, but at some point, your carpet becomes too laden with dirt, which some of it will fall out, and I think that's going to happen very soon.
So, Andrew, let's talk about the 5% correction, which could be likely in our markets. Is it just going to be profit booking after the run-up that we've seen on account of fatigue in the market, or are cracks emerging in any of the fundamentals of any sector? And also, when there is that correction, what would you recommend buying?
So the correction, I think, will be led by the banking sector, and of course the more pain will be in the PSU banks. We're still very negative on telecom, IT, and pharma, and we think the power sector is just about heading towards the downside now. There's going to be a lot of problems coming out of it, and there's been no real let up there. So I think power is the next leg to fall, and I think that's what's going to bring the markets down. Where we hide is obviously in FMCG. It's a sector we like, and we noticed yesterday that Nestle came out with a $21 billion buyback of shares, where an activist investor came in and has really kind of forced their hand. And if you think further back, then Kraft came in for Unilever a few months back, and so Unilever, as far as I'm concerned, will have to get their act together very quickly. Otherwise, it's going to be a Kraft, or it's going to be a hedge fund which pushes the management to do something more aggressive, for shareholders. So the whole sector is kind of, I think, due for a re-rating anyway because of GST, and I think you'll get these type of kind of positives for shareholders going forward in the next 6 to 12 months. So it's a good sector to hide in, and I think most investors will keep shifting away from the kind of IT and pharma sectors, which are now going to be degrowth sectors and going to be derated towards the FMCG, and where the sales and the margins will start to increase quite rapidly over the next 1 to 2 years. So the re-ratings just started in FMCG, as far as I'm concerned, with some extra incentives from either activist shareholders or companies who are saying that the management needs to do more.
Oh yes, for today, of course, there's some bit of profit taking in names like Asian Paints, Lever, and ITC. By the way, HDFC Bank is actually taking the Bank Nifty higher now, but it's not convincing yet. Let's see. if this move can continue. So, Andrew, how are you positioned in commodity space? In particular, metals, where we have seen a big rally, and oil and gas, where the rally has sort of stopped over the last 2 months.
So we're kind of a little bit more neutral on commodities after the recent run-up. We're not overly negative. We're watching China for that kind of cue there, but at this present moment, we're not. We think a weaker dollar, which is something we've been saying for some time now, will be supportive of commodity prices, including oil as well. On the oil side, obviously, we listened to what Reliance said in terms of their move into the marketing area. Oil marketing area, and we think that's going to be another big bang there. So expect what's happened in telecom to happen in oil marketing as well. So there's a lot of companies out there which we think will be derated as Reliance comes back into that space with aggression and money and BP behind it. So I think there's more pain to come from the OMCs going forward.
By the way, watch out for a couple of Future Group stocks. Interesting moves. Future Retail is up 6%. Future Market Networks is also in the green. We'll just try and pull some of these stocks up for you. And it's been quite a fight back from the mid-cap index's point of view. Remember, we opened out with a big gash on that index, and now it's recovered almost all its losses. The Nifty, for what it's worth, is positive about 2 points right now. So, Anuj, what do you think of this bit of a mid-cap recovery? I mean, I'm hesitating to use that word because it's really early.
Last 2 or 3 days, the opening was 2:1 and we were ending at 1:4. Today, the good thing was that it straight away opened lower, Surabhi, and we've defended yesterday's low. But still too early to call. 10 a.m. I think would be time to take a call. But clearly, there's a bit of a recovery which is clearly on now, and it's being led by strong banks. So that way, I think things looking up. Let's see. We'll want to see if this can sustain post 10 a.m.
Even the correction in the Asian markets has trimmed a bit. So Hang Seng was down nearly 200 points at one point of time, and now it's down sub 100 points. The rest of the Asian markets are in the red, but just by a smidge. So there has been a bit of recovery that we've seen in the Asian markets. But we'll thank Andrew for his time this morning and his thoughts and perspectives.